In Millennials and Money, home buying tips for first-time home buyers. Joining us now for that is Debbie Bloyd. She's the CEO of DLB Mortgage. And what are the first steps that millennials or Gen Zers should be taking to buy their first home?
Well, what I would do is get pre-approved first. You've got to have your money in a savings account, checking account, or investment account that we can get statements for. So if you're taking money from cryptocurrency or parent gifts, it's just easier to have it sitting in your account for the last 2 months so that money is seasoned. The other thing is find out how much you can afford. Nothing like going out to look at $400,000 or $500,000 houses if all you can afford is $350,000. That really puts you in a bad mood when you're looking at what you can afford versus what's out there. So stay in your lane. Really figure out what price you want to pay, what you're able to afford, and what you want that monthly note to be before you go out looking.
What about the down payment? How much do you really need to buy that house?
Yes, ma'am. So you can put a minimum of 3% down for a conventional if you have good work experience and you have a good credit score. If you are a first-time home buyer, a lot of these kids, they've just gotten jobs and they may not have that 2 years of work experience. They may need a parent to co-sign or to give them the down payment money. They're going to be easier to get approved FHA. So FHA is 3.5% down, and it has much easier rules to follow than a traditional 3 to 5% conventional loan.
Sometimes you have to take out PMI mortgage insurance, Debbie, if you don't have enough to buy a home, and that is an extra fee.
It is. There are a lot of loans that have mortgage insurance. That means you're putting less than the 20% equity down required by law. But that PMI is very small compared to putting more money down out of your pocket. So people used to say, I want to put 20% down so I don't have that PMI. Well, the cost of PMI have come down a lot. And depending if you have really good credit, you're not spending very much for that. It might be easier for you to get into the house that you want and then get to work paying that PMI off faster. As soon as you have 20% equity, that PMI comes off when you go in, call your lender and show them an appraisal that's recently been done that shows that you have 20% equity in the property. And with the way land is accumulating value right now on houses, you're going to have that 20% equity in no time.
At what point can somebody get that PMI mortgage insurance fee out of their mortgage payment?
Okay, so the easiest way is to call the lender that you're currently with. So if you go to refinance, which some people do, the benefits, you can get that PMI off, but you don't have to. You can also get an appraisal, and that appraisal will show that now that the house prices have gone up, you actually have 20% equity. If you refinance, you're going to pay today's current interest rate, which is in the 5s to 6s. And if you bought this house a couple years ago when rates were 3s or 4s, you don't want to refinance. You'll just be paying more. So call your current lender, see if they recommend an appraisal company that you use or if they have to order it. Then that $500, no paperwork, no credit pulls. It's an easy way to get that PMI off.
When I bought my first home, interest rates were 8%. I was able to get that down around 5% because I was a first-time home buyer and there was a program going on. Is that still available?
Well, first-time home buyer is more of an ideal now rather than a loan. So first-time home buyers do put the 3 to 5% down or the FHA loan of 3.5% down. But you can actually buy down your rate at any age. So if these millennials or Gen Xers or seniors, anybody that wants to buy a rate down can, but you have to make sure that the numbers work.
Always terrific information. Thank you so much, Debbie.
Thank you. I appreciate it.
Go to businessfirstam.com for where to see our show on TV.